Tokenmetrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.
We are live. Welcome to the Token Metrics Monday live stream. I'm your host, Bill Noble. Today, we will try to master the disaster. If you need a roadmap in crypto or you just flat out need help, please subscribe to this channel. Tell your friends, US, Europe, Middle East, Africa, Asia. Tell your friends this is where you come for guidance in this market. If you like the content, give us a like. This show is brought to you by tokenmetrics.com, a website that hinted you should go into cash 4 days before this started. I'm joined by my host, Mehdi. Mehdi, hello, welcome.
Hi, Bill. Good morning.
Hi, good morning to you. All right, let's chit chat from people on the stream. Just welcome everybody. Always feel free to let us know where you're from, and we will try to give you a shout out throughout the stream. Lava from Tokyo, first on the stream. All right, up late in Asia. All right, our friends from Greece, Tommy, hello. Okay, Ashty Mac. All right, India, and all of our friends, Luxembourg. I know my friends from Washington, D.C., I believe Kentucky, the Bluegrass State, New York City, Netherlands, Houston, Vermont, New Orleans. Are you getting a flavor here that people are tuning in? That's awesome. Slovenia, and of course, our friends from the UK in a variety of different cities. I know they're coming in. There's Montreal. Logan, welcome. All right. Baltimore, Ghana, Prague, Czech Republic. Check it out, folks. And of course, my home state of New Jersey or Jersey, Portugal, Finland. All right. Now that we've welcomed everybody, let me just take a deep breath. Okay. So there are bear markets and then there are crashes, right? Bear markets last a long time, and this might last a long time. Or we could just maybe crash it out for a day or a week. There's a difference between dealing with a bear market and a crash. I've seen a few crashes myself. So without talking too much or giving too much away, and if you're interested to know what the stock market looked like in 1987, which was the last time that we had something called Black Monday. If you're interested in Black Monday, stay tuned for that chart of the stock market back in 87. Now, let's begin with geopolitics. So I wake up, I'm lying there, I look at my phone, and it said, Ukraine crisis, markets lower. Let's talk about geopolitics for one brief moment, okay? Vladimir Putin is ex-KGB. That is the Russian intelligence service. And they were, the toughest, baddest guys out there during the Cold War, right? And Putin himself, is a hardcore Russian patriot, right? So say what you want about him, but he's a Cold Warrior and he knows how to fight. Now, if you're going to invade a country, do you put your army on that country's border and then wait for all that country's allies to run in and provide aid? The answer is no, okay? If you're going to invade, you put the troops there and you go. Okay, so if they're not going to invade, what is Vladimir Putin doing? Well, he's making everybody upset. He's scaring everybody. The media, of course, which is, addicted to disaster stories, is picking up on it. And what is his ultimate objective? Well, it's to take advantage of the fact that U.S. rates are going up to scare everyone. And what does that do? It takes down our stock market. How do you hurt the United States? Well, you hurt their stock market. So I know people think war is coming. And of course, I'm not a geopolitical expert, but this feels an awful lot like the chess master over there scaring everybody to try to create an event in capital markets. Because just as a side note about the Fed, speaking of talking tough, anybody who thinks the Fed is going to back away from hiking rates because the stock market went down 6% is crazy. Okay? You cannot have inflation at 7% and interest rates at 0. You just cannot. Now you can be a little bit nice about how you tell people that that's going to change, but that's going to change. Okay? So the Russians are going to continue to scare everybody, and Jay Powell is going to scare everybody just by the fact he has to do his job. Now, let's start with equities. So we're going to be going back and forth in this presentation between stocks and crypto. The ultimate objective is to say, where is the bottom and what should you do now if you've lost money? Okay? In other words, how do you manage risk? Now, last week we talked about the fear of being short driving bear markets. All right? That was the title. And what does that mean? Well, that means the market goes down and everyone freezes. Everyone goes, well, I can't be short here. I can't sell ETH in front of 2,000. Are you crazy? You know, Michael Saylor's average price in Bitcoin is like 30K. I can't sell Bitcoin at 32. I'm afraid to be short, or I'm afraid I'm going to sell the low. All right, so let's begin with how to set your mind. Frequently, it's the best. When is the best time to sell? Let's ask this question. When is the best time to sell? The answer is when you don't want to. So when it's mooning and you can't believe how high it's going, you don't want to sell. You want it to keep going, right? And I tell you, as I've told you in the bull market, when you feel like throwing a party, you should sell. Now, in the bear market, what should you do when you don't want to sell? Well, you should probably raise a little capital. Why? Because you don't want to sell when you're forced to sell, right? When you're liquidated or your capital's gone or their coins are down so much that it would take a 5-year bull market to have them come back. So with that in mind, let's also focus on the fact that in 2021, according to some sources I have, more money flowed into equities than it did the last 10 years. More money came into stocks in 2021 than it did in the last 10 years combined. So with that said, let's look at S&P. So we started on the left at the all-time high, top left corner. The stock market went down, it bounced. Okay, then it went down and bounced again. Now we're in that yellow triangle where you could get a lot of gratification. It's called wave 3 of 3 for any chart guys out there, right? If you look that up in an Elliott wave book, that third wave is where people get the most gratification. Now, if this is a Black Monday or a Black Monday week, okay, stocks go down 20%. So that's taking S&P from 4,400 to 36,000 and change. So again, folks, in crypto, 20%, oh yeah, we could do 20% before lunch. Okay, in equities, if equities go down 20%, right, then people can maybe start to get upset. Or maybe somebody can question how aggressive the Fed can be. But not up here. Not up here, right? It could go 20% lower. Now, let's look at stocks in Europe because this is very relevant, okay? European stocks have done well. Why? Because the European Central Bank can't raise rates. Why? Because that would cause bond yields to go up. Well, the European Central Bank has bought every government bond in Europe. So if they raise rates, they would blow themselves up, to make a long story short. So European equities have not really gone down until today, okay? Stock 600, okay, which is like the S&P 500 of Europe, just broke its 100-day moving average. It's made a 3-mountain top, which is a type of topping pattern from Japanese candlestick formations, similar to a head and shoulders. And to me, it looks like a bowling ball thrown out of a building formation, herefore known as BBOW. So if European equities are BBOW, what does that tell us? Well, it could mean that capital, also because of the Ukraine, is going to start flowing from Europe to the United States. If you don't want to own stocks in Europe, what are your choices? Well, you can own an American bond at 1.5%, or you can own a European bond with a negative 3% yield. You can get 1.5%, or you can pay somebody to hold your money. Which is more appealing? Well, it's appealing. U.S. bonds, even though the Fed is going to raise rates, U.S. long-term bonds, which don't move around necessarily based on what the Fed does. It does and it doesn't. But if capital runs out of Europe, it may run into U.S. bonds. Now, I tried to make this easier for you by showing you a U.S. bond ETF called TLT. TLT is sitting on its 200-week moving average, and it's doing a bump and run from a trend line. So let's review what I just said. U.S. stocks could go down 20%. European stocks could go down more than 20%, right? To U.S. bonds, okay? They may just all flock to the United States looking for a positive return. Now, if that's true, the value of the euro could fall. And you're like, wait a minute, I don't understand. Well, yes, you do. So if people got to get out of European stocks or out of European bonds, they got to take those euros and move them into dollars so they can come over here and get a positive yield. Well, if the euro goes down, doesn't that make the dollar go up? Yes. And what happens if the euro goes down a lot? If the euro goes from 1.14 to 1.07. Now, that doesn't sound like a lot to you, but in the currency market, that's a lot. So if the euro goes down and the dollar goes up, all right, simple, and stocks are going down, what's going to happen to crypto? Holy shit, stocks down, dollar up. So if you didn't understand anything I just said, stocks down, dollar up, and dollar up can be enhanced by the geopolitical problem. So if something really does happen over there, the legacy markets flock to the dollar. All right? Now, let's just start talking about crypto, and let's begin with like reasonable support levels. Okay? So in crypto, in ETH, it seems logical that there would be a move below 2,000, right? At a minimum. So the March 2021 launch point, okay, which was retested in July. So if you look at that yellow band, right, 1950 is roughly where ETH bottomed back in July. So I don't think it's unreasonable, given everything I just said, for ETH to retest, that old bottom. That's 1950. Now we're trading at 2,200 something right now. So I don't know. If stocks are going to go down 20%, ETH's definitely going to go to 1950, right? Now let's look at Bitcoin. This is the CME futures contract, okay? So this is just American time zone trading. This is the weekly chart. What do we notice? Well, you'll see that little yellow rectangle on the right-hand side. That marks a weekly gap. So that means there was an up move over a weekend, okay, in early 2021. That gap has not been filled. That gap comes in at 25K, okay? So if Bitcoin is really a mess, right, and the market craters and ETH doesn't hold up at 1950, there are two levels in Bitcoin that I'm looking at. One of them is 25K, right? Well, actually, three levels. 30 is the obvious level, right? It's an even number. Then there's the gap at 25K. And then there's the old all-time high at 20, which also happens to be the 200-week moving average. Now, I know that little black line, it's hard to see because, Bitcoin futures haven't been around that much. So let's talk about what we just covered in Bitcoin. 30K is a relevant level. 25K is probably where the first level of decent support is. And obviously, if 25K gets tested on a stock market problem, a wick down to the old all-time high at 19K or 20K, even though it's obnoxious to say on YouTube, from a technical analysis point of view, I watched Benjamin Cohen a month ago. He's like, yeah, 20K could get retested. It was the biggest level in the history of crypto, and it hasn't been retested. So if there's a flash event, or if you've got capital, right, guy, which is the other subtle point here, if you've got capital, right, or you got stable coins, 19K in Bitcoin is possible today. All right. It's also possible at some point this week because, the Fed's coming out this week, and I don't know what they're going to do or say, but I'm pretty sure they're going to tell you they're not saving the market. I mean, they may not say it that way, but the market's going to figure out the Fed's not saving them in the first half of this year. Okay, let's look at Bitcoin on an intraday basis. Okay, so it looks like we're starting a new downtrend, right? The market seems to be in three-wave mode, which is like basically down, 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 right? In other words, notice there was no bounce over the weekend. None. That's typically what you get in a three-wave, is if you get short from the right place. By the way, what is the right place to be short? A failed rally. So if you can get short near a failed rally, a lot of times in a three-wave, you don't take any heat. Now, the bottom line is, from using an intraday chart of Bitcoin and some Gann and some Elliott wave, I can draw 25K and 19K as support. So in other words, as a technical analyst, I went to multiple different methods to try to confirm that 25K and 19K are critical levels in the event that this turns into a disaster today, or the rest of this week is kind of a blowout, right? Now, let's think about the chart. So we drew on the chart, we came up with levels. Now let's think about it. If you look at like roughly 31K, if Bitcoin is below 31K, that means everybody who's bought Bitcoin since December of 2020 would be underwater, right? That means everybody who's gotten into crypto, institutions, retail, short-term traders, people who are just trying to get in, frankly, it kind of breaks my heart, right? Because I know there's a lot of people that wanted to get into crypto. I got a lot of people asking me, I thought crypto was supposed to go up when stocks go down, and that may happen eventually, but maybe not today. For the moment, we need to focus, right? I know this is painful. I know I just gave you some crazy levels, but you need to just focus, right? If you're at 31K, right, the next level is the 200-week moving average at 19.5K. That means all those people, all those institutions, and all those leveraged dip buyers, because don't forget, folks, we got people buying the dip here, right? And we got people buying the dip probably on leverage, okay? These people, if there's a mass liquidation event, 19.5K doesn't seem unreasonable. The same thing is true with ETH, okay? ETH really took off in March of 2021, right? And everybody has sort of been trapped there for a while. So if ETH goes below, say, that support point at 1949, Okay, brace yourself. Don't run off YouTube. But the 200-week moving average is at basically 1,000. So if everyone goes to sell at once, or you have some kind of liquidation wick, that's the type of price action you could see. Right now, you're like, Bill, you're crazy. And I'm like, well, I know that's a crazy number, but if you think about everybody owning ETH, since March of 2021, losing money, not to mention how many NFT projects have to get hedged, right? If a Bored Ape purchased by BlackRock costs 132 ETH, right? He's got currency risk, right? The Bored Ape may still be worth 132 ETH, but it's not helpful to anybody or him if ETH loses half of its value. Now, can ETH lose half its value? More on that in Altcoin Overtime, so don't go anywhere. Now, again, the 200-week moving average in ETH, right, is roughly 990. Now, let's look at S&P. So, all right, we know that crypto can do crazy things. We know that there can be these huge wicks down on leverage liquidation. We know this, right? We know it. We know that if venture capitalists and all these huge players go to sell, that crypto is so illiquid that it could wick down. But what about stocks? Well, in the stock market, the 200-week moving average in the S&P is roughly 1,000 points lower at 3350. That would be a 20% decline from where it is right now. Like I said, you can't talk about the Fed saving the market, as in stocks, until stocks are down 20 to 30%. This is the S&P from the 1987 crash. So this was the chart promised at the start of the stream. Now, folks, I know 1987 was a long time ago. I think I was a freshman in college. And this made the news, and I thought it was the end of the world. And so did a lot of other people. You had all kinds of headlines about mass despair in the financial district. I know a story that one guy went home, went to the cash machine, and bought a gold bar because he thought the world was ending. 25% drops in equities, okay, don't happen very often. All right? They happen in crypto, but for stocks, this was the mother of all declines. But was it? Wait a minute. It was a huge bull market in the 80s, and look where it stopped. Oh, wait, the black line. What's the black line? The 200-week moving average. The same line we've been talking about in Bitcoin. It's 19K. It's roughly 1,000 in ETH. So if you could have an event, a crash, whether it's a day or a week, the market reverts to the mean. I know Mehdi knows what I'm talking about when I say mean reversion. But for you, what does it mean? It means the market just kind of goes back to, I don't know, it's kind of like a place of balance, right? First, we were all into FOMO. And then if the FOMO ends and everyone sells, we go back to a place of balance. Now, of course, the price action that gets you there is grotesque, but it has happened before. 1987 was marked by an era of extreme FOMO, massive real estate speculation, particularly in Japan, okay? A currency problem with the trade balance with Japan, and massively higher interest rates. Sound familiar? Okay, in a video that no one watched called How to Hedge Against the Crash, I looked at a triple leveraged ETF, SQQQ. This is not investment advice, and you should not trade these things if you don't understand them. But as I understand it, leveraged products are helping people hedge against this decline. Now, just as a point of information, it's more complicated than this because, there are hidden fees and volatility and options and all kinds of stuff wrapped into this ETF. But, if this was an altcoin, right? This is a triple leverage short product on NASDAQ 100. If this was an altcoin, would you buy it or sell it? When you saw that little green blip, what would you do? Oh, you'd be like, oh, this is turning, right? It's going to go from 40 to 200. So Leverage trading is a recipe for getting in trouble if you don't know what you're doing. So don't do it if you don't have the experience. But there are ways to protect yourself against a bigger problem here. Particularly if you're a crypto investor, you may have to use an equity market product or some sort of levered product if you're afraid you're going to get totally wiped out. Now, the best idea, if you're afraid you're going to get totally wiped out, is to just raise some cash. The market turns around tomorrow. If Jerome Powell on Wednesday says, I'm not raising rates, I'm sure you'd be happy to buy back in. But I don't want you to lose all your capital because I've seen that before. I've seen people go, Bill, I love your research. I would love to continue to read it. I do love you personally, but I don't have any more money to invest in crypto. All right. Now I'm going straight to Altcoin Overtime. Let me just talk to the crowd here for a minute. Okay. Lava said the Nikkei index didn't recover. Right. That's right. Today was a good day to reload your perp. Okay. So derivatives trading at the forefront. Hey, that's an interesting comment. Okay. Hello, Bill from Mexico. Javier, welcome. All right, folks, don't forget to hit the like button. Okay. Muhammad Azim says NFTs are killing it. Okay. Art and stocks are not correlated. So art, if you can find it, could hold its value. Assuming you recognize the fact that the art is priced in a currency that can move around a lot. But yes, art is a good place to park money. By the way, we've also got a good place to park money, or places that we can see people parking money. Stay tuned for that. All right. Now, I just want to continue to say hello here. Time frame, Megan asking, time frame for BTC 20K. Okay, so that's a good question. So it could be this week, right? I mean, why not? Why not just get it over with? And if not this week, then I'm thinking it's sell in May and go away. So the most optimistic scenario for Bitcoin is that you get support at like 30K and then it stops. And then all these other levels get revisited later. What I wanted to do was I wanted to make a video that would have a shelf life in case this thing like totally blew up. So you would know, because the title of the video is Crypto Targets, right? Like what would the target be if this thing got out of control? Megan's also noting that ETH fees are ridiculous. Okay. Yes, that is another reason why ETH could get hurt. Okay. So K Tor says, I went in December of 2020. So I feel you, Bill. I took some profits along the way. All right. And following Ian's advice, I'm a long-term investor, so I'm okay. So again, we want everybody to try to be as sane as possible. Jared King, I appreciate the love. He says, finally, real TA. Thank you. Thank you. Please tell your friends. And George, we welcome you from France. Okay, let's go to Altcoin Overtime. Now, I know y'all are out there going, okay, Bill, thank you for giving us the deal on Bitcoin and Ethereum. Okay, so let's review. Bitcoin has support at either 30, 25, or 20. ETH is 1,900 or 1,000. Maybe there's some support at 2,400 if it can get back above it. Okay, if there's a problem, it's probably going to be either with ETH or with the fact that there's got to be institutional hedging in Bitcoin. That's the executive summary of everything I've just talked about for 40 minutes. Now let's go to Altcoin Overtime. Wait a minute. This isn't an altcoin. It's total crypto market cap, excluding Bitcoin and Ethereum. Yes, it is. So you have an altcoin and you are wondering what is going to happen to my altcoin or what is going to happen to crypto. Now, I can't chart 1,000 altcoins at once, right? But what I can do is tell you what can happen to total altcoin market cap. So there's a head and shoulders top, right? On the weekly chart of altcoin market cap, total 3 on TradingView. Now, if you go just by the chart, lo and behold, the target of the head and shoulders top also happens to be the 100-week moving average. So that means altcoin market cap could go from 605 billion back to where it was in March and July. That's 410 billion. So that means altcoins, like not Bitcoin, not ETH, but everything other than that, could theoretically lose 200 billion in market cap to complete a simple chart target and get back to a long-term mean. So if you have altcoins that are worth 50, 100, 10 billion, $200 billion wiped out of altcoin market cap is an enormous sell-off. Now, the real scary chart, which I actually looked at this chart 4 times because I thought the data was wrong. Okay, the 200-week moving average in total 2. That's total crypto market cap excluding Bitcoin. So it's ETH along with all altcoins. Currently is at roughly 900 billion. The 200-week moving average is 400 billion. So this means that you could lose, I don't know, 200-300 billion from altcoin market cap. So ETH at 1,000, when you look at this, is not unreasonable. It's not. Because if total altcoin market cap, right, that's with ETH, goes back to where it was at the start of last year, and we essentially unwind the whole trade, this is the worst case scenario, right? But as with stocks, as with 87, right? Yeah, I know. It's just like, wow, the whole thing's going to lose half its value, or could. Theoretically, yes, right? Now, let's look at Ethereum versus Bitcoin. To make a long story short, if the market goes down, Ethereum could take it worse than Bitcoin, right? Ethereum versus Bitcoin, got to almost 0.1, and now it looks like it's going to go to 0.04. So on the way down, people selling ETH, hedging NFTs can probably cause ETH to underperform or go down a lot. Let's just put it that way. If the market goes down, ETH is probably going to take the worst of it. Now, let's talk about, we're going to call them wingnut bids. So let's say that there's an event. Right? Let's say I'm a technical analyst and I have to tell you something about big altcoins. What am I going to tell you? I can draw all the lines on charts that I can. But it's like, okay, in the worst case scenario, what should I do? Right? If I wanted to invest, if there was a crash this week, where would it crash to? Well, I don't know. Let's see. Solana in July of 2021 was at 27. It went from 27 to 260. So what happens if people who have been long since 30 cents decide they better get some money off the table? Well, I don't know. It bottomed in July at 27. Like, I can't say anything more than just that without sounding like a nut. Avalanche broke out from 40, okay? And in January and July of last year, 10 was a level. So, I mean, the bottom in Avalanche is either at 40 or 10, right? Now, if it gets back above 74, awesome. I can make a new video, right? I'd be happy to do that. The Fed comes out on Wednesday and says, guys, listen, everyone take it easy. We're not going to destroy the world. Great. But what you really need, I think, is some information as to, if this gets ridiculous, can I save this video and watch it later and say, all right, if the market's down, what's the support levels? Okay, Cosmos. Now, we are very happy to say, and many will go into this in a minute, right, that Cosmos layer 0 is holding up. So we could be witnessing a rotation, and again, I'll let Mehdi talk about it, away from layer 1s. 1 year ago, nobody, and I mean nobody, as in even the smartest people I know in crypto, were talking about layer 1s and ETH competitors absolutely mooning. They mooned. Nobody thought that. That's why it moved. Now, all these layer 1s may be over-owned, and all the layer 0s, like Cosmos, may be under-owned. That's why Cosmos is holding up today. Now, that said, everyone thinks there's a safe place to hide in a crash, and there isn't. but it is encouraging that Cosmos is holding. Clearly, layer ones are overowned and Cosmos is underowned, right? The best support point below the market that I saw in Cosmos was 20. Okay, that's if there's an event. If there's no event, Cosmos may just sit here. Luna also holding up relatively well today for reasons probably related to stablecoin creation. 44 is one level in Luna. The March 15th high, okay, which was retested in September, is 22. So if there's a crash, one of those levels may hold, or Luna will just sit here. Hopefully, I don't have to talk about Luna at 44 or 22. I can't imagine what the market looks like, or can I? I just told you about it, say, for 40 minutes. The good news about what I'm telling you is, even though the prices in the levels seem crazy, at least if it happens, you'll have seen it before. I know it's shocking, right? You wake up, you look at this. I talked about this Friday, and I woke up this morning, and I'm like, oh my God, it really is Black Monday. Even the people who think of it get surprised. So I don't want you to be surprised. I want you to be like, oh, I can calmly make investment decisions no matter what the market does. Now, Polkadot, aka Heartbreaker coin, all right, I have trendline support at 15. I certainly hope that holds. I hope the layer 0 narrative holds up. If it doesn't, well, I don't know what to tell you. It could be 12 or 4 or something silly, right? Really, I hope Polkadot holds 15, because the thing that scares me about Polkadot is all these other layer 1s are operational and Polkadot is not yet operational. So I'd be afraid of panic selling in Polkadot, because frankly, Polkadot was an early warning coin. I should have known when Polkadot didn't hold 28 that this market was done, right? That's my learning moment. Phantom, all right? We discussed that, you know, this is good. DeFi, this is where people are going to go to park money. So 204 was support. We're at 204. You know, this is kind of toppy. So maybe 204 holds, right? Maybe if the market bounces, Phantom bounces harder. Or maybe Phantom goes to $1.17. You just have to remember, Phantom took off from 50 cents in August. So if there's an event today or this week, you know, you have to remember, you don't want to be long Phantom at 2 and have Phantom go below $1. Right? You want good projects at good entry points. And if you've waited this long, right, there's no harm in waiting another week, because I'm just giving you a navigation point that $1.17 was the takeoff point from the rally in Q4. And this whole thing started with Phantom at 50 cents. Near. Now, I know that this is the juicy coin that a lot of people are looking at. Okay? Hopefully, I discourage you from FOMOing in at the top, right? It was time to take some money off the table at that point. In retrospect, obviously. Support in Phantom is at a prior low at 7. So if it's not a disaster and ETH holds 1900, Phantom is probably good in front of 7. Now, if 1900 in ETH does not hold, okay, I don't know, right? I mean, Phantom could have support at 5 or 3. In other words, if you see a wick below 7, let's do it this way. If you see a wick in near below 7, that might be a 1 day or even like a 1 hour wick. All right. But don't think near can't go down. I know we like this. I know you want to buy this. I get it. I get the narrative. Mehdi will go into it more. But you also have to remember, I had one of my analysts and I suggested he wrote a blog article about Near Protocol and what it was. And when he Googled Near, he said there are a gazillion articles about what it was. So a lot of people knew this was a good coin at 19. Okay, now the question is, where can they get washed out? That's either 7 or something below 7. Let's put it that way. Okay, folks, that is Altcoin Overtime. All right. Let's take a look and let's see at the chat what everyone's saying. Hey, Bill, love the show, but I'm a Penguins fan. Well, that's cool. You know, Token Metrics has black and yellow. That's sort of like a penguin. right? I grew up a Rangers fan. And blue looks good on camera. Waiting, Cheshire Cat wants Cosmos at 10. Gunblazer's like, yes, please. Poland says hello. And one person, Food Meets Fire, says moon on Wednesday after the Fed. Okay. So that is also possible, okay, to get a move off the Fed. Okay. GB sold his dot at 29, and Wilfredo is in Chicago, and he says it's boomtown. That's right, folks. The economy is actually doing pretty good despite COVID. And Jonas says, look out below. All right, Mehdi, are you out there?
Yes, sir.
All right, Mehdi, why don't I turn it over to you so you can tell us what you got and we can chit chat a little.
Yeah, firstly, I want to remind the users and some of our customers who are watching this show that bear market as well as bull market, in both the markets, you should study. Education is of utmost importance, like study how to evaluate project, study how to build conviction. So let's say when the market drops 60%, 70%, 80%, you without any fear can do two things. Firstly, have diamond hands, not sell. And secondly, let's say if you have some money, extra money that you kind of want to deploy, you know exactly where you want to deploy that. And you can only get that education when you study the team, you study the technology, and sometimes team and technologies are fine. Uh, Sometimes it also kind of pays to basically be very early in the project. So I want to firstly share like one of the tabs, which is basically for our customers, but I'm going to share it with you guys because I feel like it's my responsibility. Uh, so at Token Metrics, what we do for you guys is that we like to be forward looking. I'm 100% sure. I don't know where the bottom is for this market. It could be Bitcoin at 15,000, 20,000. I don't have a crystal ball. I apologize for that, but I do know this in a decade or so, this will be 100 trillion market. And right now, the market cap is 1.5 trillion. So if it does 60, 70, 80x from here, having some of those hidden gem, having some early stage project that basically take advantage of this theme is the way forward. So I'm going to quickly share what we do at Token Metrics. This is one of the newsletter called Hidden Gem Watchlist, and we make it very easy. Like we study it we study plenty of hours, so you can basically get the score. This project scored 80 with our framework. This is their website, this is their GitHub, like this is their white paper or their presentation deck or their GitHub. This is what they do in a very easy to understand manner. Give you a couple of reasons why we like this project. We give you overview of their team. We give you the token utility, and we can even we even tell you where to buy the token. Now, we don't suggest you to go and buy the token first thing you see. What we do is we're trying to give you an overview of a token so you can study it on your own, and whatever arguments we have made, going on and doing research and trying to figure out whether this is the coin that could do 100x 200x for you. So one of the products we have at Token Metrics is this hidden gem newsletter, and through this we are basically making you bulletproof. We are making you forward looking, so whatever happens in the market, it doesn't bother you that much. So even though my portfolio is down 40-50%, whatever stable coins I have, whatever salary I earn, I'm trying to like be forward looking because I'm 100% confident that this space is about to, in a decade's time, explode. It's $100 industry, and I'm 100% confident about that. uh, so a lot of users asked us questions regarding Atom, what I think about Atom. See, when there is a coin that you are seeing bid on, so if the market is collapsing 60%, 70%, and there is a coin that is trying to hold its value, it's not collapsing as much, that tells you that there is a bid for it. So if the bull market resumes, if the market stabilizes, if the market consolidates, that's the coin where a lot of VCs and a lot of investors will be looking at. And there is a fundamental reasons for that. Last week I did like on-chain data for you. I've also done a deep dive on Cosmos. I've also invited the CEO of Tendermint that kind of gave foundation and gave birth to Cosmos. Have a look at that. Have a appreciation of what they're trying to do. I believe they have turned around the tokenomics. They have turned around the token utility. A lot of people were basically didn't see that coming. And now all of a sudden, people have started to realize that Cosmos have a genuine tokenomics and has one of the best network effects after Ethereum. Honestly, after Ethereum, now they have the best network effect. So if you see Terra Luna, it's built through Cosmos SDK. You see crypto.com, they're built through Cosmos SDK. You see Binance Smart Chain, they're built through Cosmos SDK. Thorchain, they built through Cosmos SDK. Secret Network, they built through Cosmos SDK. Now, I'm not telling you to buy Cosmos at current prices. Like I don't know where it can go, but I'm telling you from my experience what I am doing. So my strategy is I'm going to share my screen and hopefully show you how I'm thinking. Uh, so Bill is the technical analyst here. He does far superior technical analysis than I can. I'm a more of a fundamental guy, but the way I'm seeing this market is that Cosmos over the period of time has been trending upwards. I saw that it has like below 30 or $29. It had strong support, so maybe I buy some over here. Then I maybe buy around the trend line channel, which is around $25, and then you also have support around $20. So I'm just gonna do DCA. Let's say if I have 5,000, I'm not gonna deploy my 5,000 here. I'm gonna buy some over here, buy some over here, buy some over here, and let's say if even if I have some cash left and Cosmos rally, I might just buy a breakout. So breakout could be all time high of maybe $40. So if they break that resistance, I might buy that as well. I have no issue buying things at higher prices if the team is amazing, if they're executing on all cylinder. So that were some of my thoughts on Cosmos. I remain long term bullish on it. I don't know what the price could be in next few days. It could be $20, it could be $10, but rest assured I'm going to be accumulating Cosmos with whatever risk tolerance I have. So another advice I have for you: whatever extra money you have, not the money from your own personal saving, whatever extra money you have for your investment, deploy that. Don't basically lose your sleep over a volatile market, right? Just have extra cash that you think is like casino money for you. Basically invest and try to compound. So that's my strategy at least. Now, another thought I wanted to share was about Polkadot and Ethereum. I think if you kind of compare Polkadot with Ethereum Cross, kind of defining the Polkadot's prices in Ethereum, I think it's at the bottom of its range. I think if it goes down further, maybe 10% down, I think it becomes more attractive to kind of start thinking about buying Polkadot. And I also did a 100x show with Derek. He's the founder of Moonriver and Moonbeam, and I learned a lot about Polkadot and Moonbeam and Moonriver. So basically, through that podcast, I'm convinced to kind of take a contrarian view. At the moment, market is kind of believing that Moonriver is not going to be like a good project. You can kind of see that there's a trend line forming, downwards trend line forming, and I believe you can try to think of a contrarian position here, because market feels at the moment that Moonriver will fragment. Moonriver and Moonbeam deploying simultaneously will fragment liquidity. He convinced me that Moonriver will be a separate entity of its own, while Moonbeam will have a separate entity of its own. So Moonbeam will be specialized in DeFi projects, while Moonriver could be the specialist project for gaming, metaverse, and NFTs. I think NFTs has a bigger scope than DeFi. That's just my personal opinion. And if those kind of projects deploy on Moonriver, then I don't see why Moonriver should like go higher. At the moment, it's a 700 million valuation. I think risk reward is starting to look attractive. So it's another one of those coins that I kind of want you to have a look out for. So those were my like thoughts. Polkadot will come to an attractive price. I don't know where the bottom is. Moonriver, I think market could be wrong. Please do check out the 100x show. It's going to get uploaded in next couple of days. And Atom is basically trending upwards. Just don't fight the trend. Uh, so yeah, those were some of my short thoughts. Bill, happy to answer some of the questions, some of the trends you are seeing in the market, or some of the questions users have.
Well, I mean, one of the things that I wanted to ask you about, and I know we talked about this, we talked about this before the show, is, this whole idea about the bear market, and looking at projects and studying projects that haven't launched yet, right? In other words, what you and Michael do on a regular basis at look at projects and help people study stuff that will be released possibly towards when this bear market is over in October. Is that right? And can you tell me about, one or two of the things that you looked at recently?
Of course. So absolutely, I think studying projects in the bear market is absolutely must, and especially those projects that haven't launched. So I'll give you two reasons why you should do that and why it should be a good practice, and just try to do that for the next few years. Firstly, those projects that launch during bear market, they are cheap because let's say when they launch, they don't have the hype, they don't have the support of the market, so they don't go crazy 30x, 40x after launch. So you can get these amazing projects at fair valuation. You can might even get like a amazing project at undervaluation because the market is not hyped about it. In fact, there is underhype. In fact, the VCs might sell because they have redemption. In this market, people are saying, "Oh, VCs are shorting." VCs are not shorting, guys. I don't think there is liquidity in the market for coins to get short. What's happening is VCs that basically invested in project and they did 30x, 40x, they're now just taking profit off the table because Fed is gonna taper out the liquidity and they just want to take some profit out. I believe in this market, whether it becomes a bullish market, bearish market, just study hidden gems. So we have a watch list which Michael and I cover. We have every week 5 to 6 projects, and I'm also seeing amazing trend in NFT. So we might even have a watch list for NFT. So those are the projects that you need to study, and these projects aren't launched yet. So if you study now and when they launch, you can decide whether I want to buy it or not. Again, let's say if you study the project, we enter in a bear market, okay, you can buy it. Let's say if you don't enter a bear market, we enter a bull market, you can still buy it, and because of the hype and everything, you are able to know about this project way before other people, and you can even take advantage of the hype. So what I'm trying to say is, whether it's a bear market or whether it's a bull market, studying hidden gems, studying low value cap gems, studying those projects that haven't launched is absolutely the best idea out there. So you can only check out the watch list, unfortunately, by subscribing to Token Metrics, or sometimes after a few days time lag, we give you these hidden gems sometimes on YouTube. So watch out for the next hidden gem video from Michael. He'll cover that, and there are definitely few on my watch list. One is called Goldfinch. It scored 80% in our grade. I like the fact that the token will have some utility, which will basically allow off-chain assets to have on-chain liquidity through lending and borrowing. I also like the fact that it's going to get listed in Coinbase Pro, and it also has it also has a team which has background and have worked in companies like, let's say, Goldman Sachs, Coinbase itself, and have studied in schools like Wharton and Princeton. So has a very very good team. Apart from that, I really like Shade. Shade scored 76 in our fundamental review. I'm already speaking to the team myself. They look to kind of disrupt. Luna to Terra Luna. So those are the two projects in my radar which I think are very interested. So note those down. Note those two downs. I feel like even when I say, okay, investigate this project, I think onus is also on you to basically go and do your own research and try to see what are the metrics that will allow you to be a good investor. It's not an easy task. If you are trying to make generational wealth, trying to do 100x, if it's too easy, that means you're not doing it right.
All right. So Mehdi, I appreciate that. One of the things that, I can't emphasize enough, and Mehdi is also telling you directly and indirectly, is in order to invest, you have to have capital, right? So homework is important, but so is sanity and capital. All right. Now, for anybody who stayed around, all right, let's try altcoin double overtime. Okay. Briefly. All right. Double overtime. All right, here it is. Okay, let's take a look at Aave. We had client requests for Aave. All right, so it's trading at 160 right now, 145. Obviously, no one wants to sell Aave down here because there's probably pretty good support at 100. Now, here's what I can tell you about the price action so far while I'm doing the stream. When you have a market like this, I think, not investment advice, but it's more of sell rallies than buy dips, right? So, you want to buy or at least know where the price could be in an avalanche. So with Aave, it either goes back above 145 or back above 155, and that's it, hopefully. If it can't get back above 155, then you have to at least acknowledge the risk of 100. Okay, notice acknowledge risk. Like don't go on YouTube and say, oh my God, Bill said Solana is going to 40. No, what I'm saying is you have to be prepared and know where the market goes in case there's a dislocation. Okay, Gala Games, decent support at 17 cents. Okay, probably support just below that around 15 cents. Okay, so I mean, if Gala Games is not holding here, then I think you have to wonder what happens if the market gives out. But for the moment, Gala is on support, as is Polygon, right? So if people are overcommitted to layer ones, then things like layer twos or other types of projects other than layer ones that are under-owned, right? Matic is probably very owned, right? But these layer two and other types of projects may actually do better than the big cap layer ones, particularly if you have a crash scenario, right?
I share the same sentiment, Bill. I feel like with layer ones, you had a lot of VCs who had those tokens, and now basically they'll be taking profit. But the next trend in the market is, I think we are at a stage where all the layer ones have been saturated. Long term, I'm still very constructive. I'm very bullish, but I think when the market basically shifts from a bearish sentiment to a bullish sentiment, I feel like layer twos, layer zeros, and EVM compatible platforms will lead the rally. So when I say EVM compatible platform, I mean projects like Moonbeam, Moon River, Evmos. Evmos hasn't launched yet. Is a EVM Ethereum based smart contract platform on Cosmos. Very very nice project. You have Aurora on Near. You have Neon Labs. Neon Labs hasn't even launched. So Neon Labs will bring Ethereum to Solana. So those will be the project to have a look out for, and also different layer twos. So Metis is one, Matic in one, Matic is one, Metis is one, Arbitrum and some of the other layer two projects will also launch. But the theme to kind of look out for, even in layer twos, will be zero knowledge proof based layer two. So Matic, one of the reasons I like it for the long run is because they will soon adopt zero knowledge proof. So Matic is something which I feel comfortable with. Now, Bill mentioned Gala. Gala few days ago was 50 cents. Now it's 17 cents. I want you to go and look at go on CoinGecko and see why the crash happened. I think the crash happened because the valuation were absurdly high. It was like 30-40 billion. For me, it just didn't make sense. And now valuation are okay, but still not very very fair in my opinion. I kind of see more downside for Gala, but for other layer twos and EVM based platforms, I am very constructive.
All right. Yeah. Thank you, Mehdi. So he is also telling you about the value of strategic thinking. Macro, fundamental, you got to have an idea about stocks, where support points are below the market, and what are the next narratives. So you don't want to get, bad projects at bad entry points. You want to get good projects, the future at good entry points. Okay, a final word here. All right. Now, I understand that no one wants the market to go down. I don't either. But if this is going to be a sharp down day, if stocks go limit down or worse, okay, a brief reminder. After the pandemic started, VIX, the measure of fear in equities, went to 80. Okay, that fear ended with what? Why did that fear stop? Well, the Fed printed more money in March of 2020 than it had printed in the last 12 years. So they had done 6 trillion. They did 6 trillion in March of 2020. Interesting to note that fear is at 36. That is quite high, but it's definitely not 80. So the Fed saved the day, right? And fear went all the way up to 80. Now the Fed is pulling the punch bowl. Okay. The Fed is telling you no more, right? So fear is high, but it may not be as high enough. So you want to be ready. You don't want to just be ready, right? Always be ready. That is the theme and what I want you to take away, right? Mehdi is telling you, always be ready, right? Always know, hey, what's the next narrative? What's Token Metrics saying? What's Michael and Mehdi talking about the next round of projects? Or, what is Bill or what's our AI saying about where technical support points are in the event that this is a bad day or a bad week, right? This week, all I'm going to be drawing are places, targets where you think you can get involved, but for your psychology, for your mindset. Folks, the most important thing is your sanity. And if you can't sleep at night, always make your adjustments. Final note, if you lost money, you have company, okay? And if I can encapsulate everything we've said here, and I've said this before, you have to take an approach like, so what, now what, right? Losses have happened. And the question is, what do I do from this point going forward? All right.
Bill, I would also like to add one thing.
Of course.
So those who are long-term investors, like thing I do is, let's say whenever there's a favorite project of mine, when the market is crashing, and even when the market is going up big time, if I check prices more than once a day, I am basically going to do one push-up. If I check my portfolio more than once a day, however time I check my portfolio, I'm going to do squat. So what this allows me to do is, it allows me to remain grounded in terms of my investment thesis. It allows me to kind of see the market in 3 years time, 5 years time, 2 years time. And I'm comfortable with the fact that, let's say in crypto, if I make 10 investment, 7 or 8 of them might in long run be unprofitable. But two or three of them could be, let's say, next Solana, next Ethereum. It can more than cover my losses, like even do like 3x, 4x my portfolio. So that's the mindset I want you to adopt as an investor. Of course, some of you guys might not like investing. You guys might like trading. That's fine too. And just if you're more on the trader side, just do what Bill says.
Okay, folks, that's it for this Monday live stream. All right. Flipped Burger, I'm wishing you well. Cheshire Cat. Okay. I definitely want to wish everyone well, to our friends all over the world. Folks, if you like the content today, hit the like button. I would hit the like button for you if you stay tuned for the whole stream. All right. Please keep in mind. All right. Like the video, share the video, and tell your friends if you need help in this type of a market, we can cover micro, macro, crypto, investing, small caps, right? And we can also focus on equities. Friends, that's it for today. All right. Sam, Juliet, Ben, welcome. Okay. I want to wish everybody well. This is your host, Bill Noble. I will see you tomorrow.